Hello, and welcome to the Crypto Beat, where we discuss what's happening right now in the crypto space. My name is Tim Copeland, and I'm the editor-in-chief of The Block, Crypto Native News site. Joining me today, we have Kain Warwick, founder of Synthenix and Infinex, and Dan Kuhn, senior reporter and editor at The Block. Welcome to the show. How are you all doing?
Yeah, thanks. Thanks for having me, guys.
Doing well.
Awesome. Now, quickly, before we get started, I'd like to mention The Block is hosting a crypto conference this year with some of crypto's biggest names. It's going to be a brilliant event. Head to emergence.xyz and use the code TheCryptoBeat, all one word, all lowercase, for 20% off. Now, the focus of today's episode is on Kain's new project, Infinex. But first, you tweeted yesterday, we're also unprepared for how insane next year is going to be. What were you referring to?
I think it's all coming together, right? We've had now 18 months of crab market. Of course, there's been a little bit of euphoria here and there, but it's all the same people. There's basically no new people in the last 18 months, right? We're all just, sitting, it's the Spider-Man meme, everyone pointing at each other, right? And I think that we are going to find ourselves back in a larger spotlight next year. And I think that it's going to kick off, a significant shift in how we approach things, right? Like these PvP games that we've been playing for a while, everyone's honed all their skills and what have you, but we're about to, be back in the, the conversation again in a broader sense. I think next year, I think, BTC is going to drive a lot of that. There's going to be a ton of attention back on crypto. We've built so much in that time. There's so many amazing new things that, if you dipped out when FTX blew up and you turned up today, the space looks quite different. There's a lot of stuff that's emerged in that time. There's a lot for people to rediscover. There's a lot for new people to discover. There's a lot of things that people are working on to make the onboarding process for new people much better. I just think it's gonna be wild next year.
Cool. And sort of on that point, what's your take on the outcome of the US election and what you think either path will mean for crypto?
Yeah, I mean, either, we're going to be saved or we're all going to jail. It's kind of, it's fairly binary, right? I think that there's a lot of cope out there from, let's call it the left-leaning Democrat, side of crypto, that maybe Kamala will not kill us all if she gets in. I'm concerned about that, but I'm also pretty bullish that I think that we will see, a shift away from the Democrats. Hopefully we see Gensler fired on day one. That alone is going to be a huge catalyst, right? This guy that's been not just crypto, right, but all financial markets, right? Everyone in almost every financial market is just over this guy. He's a power hungry lunatic, and we just need to get him out of here.
Do you feel safer in Australia?
Yeah, I think so. I mean, I was just in the US. I was in New York for a couple of weeks, and then I was in Utah for a week. I think that Australia is a very stable financial regime. We're one of the top 10 financial economies in the world, right, in terms of financial services. And a lot of effort is put into maintaining stability there. Finance is not as much of a partisan issue as it is in the US. I mean, nothing's as much of a partisan issue as it is in the US, right? So, we have our challenges, but I think from an overall perspective, it's a really stable regime from which to be doing crypto stuff out of.
And how was your fight with David Hoffman? Obviously, you didn't get the flip of the coin, but did you enjoy it?
Yeah, I enjoyed it. I think it was surprising in a lot of ways, which is one of the reasons you do something like that, right? My reason for doing it was sort of push myself, see how I reacted to that kind of a situation. Obviously it's not the first time I've been in front of a large crowd, but it's the first time I've been in front of a large crowd where someone was trying to beat the shit out of me, right? So that definitely shifts the perspective a little bit. I think probably the thing that I took away the most, right, was like in the heat of the moment, you do the things that you practice, right? The things that I didn't practice didn't happen. There was a chance for me to knee him in the head at one point, right? Like his head was like 6 inches away from my knee. I didn't practice that. It never, it didn't occur to us that he might like bend his head over and put it right next to my knee, right? Like, and so I didn't react. I was trying to throw punches even when that opportunity was there, right? And so I think like when the environment gets super chaotic, people fall back to what they know, what they've drilled, what they're really confident in. And I think that, has a lot of applications in life, right? In the times where things are calm or where, you've got some time, it's really important, this is something that I feel for myself, right? It's really important that I'm practicing the things that I want to be sure that I'm able to do when shit gets crazy, right? So in my case, it's like, when talking from like a startup perspective, it's trying to understand what is the actual outcome that I'm getting. Because when things get crazy, it's easy to become very reactive, right? But if you've practiced and you've drilled, and you're prepared, then you can maintain your strategy and maintain your tactical approach, even in very challenging circumstances. And so I think that, that's one of the reasons why in crypto, it's one of the things that separates people in a bull market from those who are really successful and those who aren't. The ones who are grinding in a bear market, who are doing all the right things, who've trained, who've been practicing, and got themselves prepared, are the ones who do really well in a bull market. The ones who are just kind of LARPing and not working that hard in a bear market, they're the ones that get run over in a bull market.
How many bear markets have you been through now?
Yeah, it's a good question. The first time that I was really doing anything with crypto was like 2013, 2014. So I saw that bear market, but I think bear markets are not as impactful if you haven't had a huge drawdown, right? So I didn't have a ton of crypto that I'd been giga wrecked on at that time. I just sort of turned up to it as like, oh, this is interesting, but it had no real financial implications for my life, right? And so I think that doesn't really count as a bear market. It only really counts as a bear market if your net worth has gone down by 90%. That's when you're in a bear market, right? So the lucky people who turn up in bear markets, of which I think I was one, you actually get a free roll almost, right? Like you're not giga wrecked. You turn up and you're like, oh, everything's cheap. You need to obviously find some conviction there. And for me, it was like the DAO hack was where like the real conviction came from for me in 2016, where I was like, okay, this Ethereum thing is serious, right? Like there's something here. I need to focus on it. But ETH was at $5, right? It's not like I bought ETH at $1,000 and then got giga wrecked and had no money left, right? I could kind of I came from the real world, if you will, and was able to start accumulating. Obviously, the 2018 bear market was brutal. For a whole bunch of reasons. We'd raised a ton of money for Haven, and by the time we got to the end of the year, in a single year, $30 million had almost evaporated. It had drawn down by 90%. And there was a lot of existential questions that I asked myself, like, how could this possibly happen? How did we get here? What all the mistakes that we made? Why didn't we prepare? Et cetera. There was a lot of introspection going on, right? At that time. I think this bear market has been less problematic, right? Just once you've seen it enough times, if you can maintain conviction, it's kind of like, well, you just got to ride it out, right? It's winter, spring is coming. It's inevitable. If you've never seen a winter, maybe you think spring's never coming. Maybe this is just the future state of the world, right? But if you've seen enough springs, it's easy to kind of hunker down and wait for things to thaw out.
Cool. Now, coming to Infinex, it's a non-custodial, but centralized exchange. And when I signed up for it, what I thought was really interesting was I logged in with my fingerprint, effectively, that and a username. And we had a question on Twitter about this. Like, what's your take on the difference between Web 2 and Web 3 native passkey solutions? As in signing, I guess, IE with a wallet, or versus using like traditional fingerprint or other techniques?
I think that we are lucky in that Web 2 has actually taken some of our cool stuff and has repurposed it, let's say, right? Passkeys are really just cryptography, right? Like it's public-private key pair, right? That's stored in a secure enclave. It's Web3 tech, right? It's crypto tech. So we now have these huge, tech firms, Apple, Samsung, Microsoft, Amazon, pushing our tech as a Trojan horse almost, right, for their users, because they've got a huge problem in phishing, in accounts getting compromised, like all of the stuff that we deal with in crypto, because we have these bearer assets, they deal with on a much grander scale, right? And so they've got a lot of incentives to try and fix these things, and I think passkeys is an example of like coordination, like global coordination, that's kind of crazy, right? It's pretty amazing that all of these different historically, it would be you'd have 10 different passkey standards. They wouldn't work with each other. The fact that the FIDO Alliance has been able to coordinate around a single standard is pretty amazing. And what's going to be good for us in crypto is if we adopt this, we get to piggyback on billions of dollars worth of advertising and education material and everything that these giant Web 2 firms are doing. Now the question is it as good? Right? Is it as safe? That's a very interesting question. The approach that we've taken at Infinex is we don't know, right? We don't know if it's as good or as safe. And so we've kind of hedged our bets a little bit and said, we're still going to be reliant on Web3 tech. You still need an EOA that can recover your funds for a couple of reasons. One, if the entire platform is nuked, and censored, you need a way to go directly on chain and get your money back. Right? Otherwise, it becomes custodial, right? And so to maintain that non-custodial posture, we need to have an escape hatch. So we still need Web3 for that, right? But one of the interesting things that's kind of emerged over the last, whatever it is, 9 months since we've been running passkeys is people lose those EOAs, those like, this is your emergency withdrawal, like don't lose control of this, far more frequently than they lose their passkeys. It's actually insane. And so we've had so many people who are like, hey, my emergency EOA was compromised and drained and I lost all my money except for the 10 grand that I had in Infinex. What do I do? Right? And we're like, wow, we didn't really expect this because, we sort of trust the EOA more than the passkey, but actually for that guy, we should have trusted the passkey more than the EOA. Right? And so we're working on a new posture, which, let's call it security light posture, where if you have less than $500 or less than $1,000 in the account, you can actually bypass having an EOA at all, right? Which for the average person who doesn't have an EOA is going to be far safer, because forcing someone to create an EOA, to create an Infinex account when they don't have the right posture to do that in the first place is actually net negative, right? It's actually worse. And so what we want to be able to do is have someone who, has a small amount of funds turn up and use something more like social recovery, like Google Auth or whatever, to recover their funds. Now, the trade there is that you don't have this escape hatch, right? You don't have this ability to turn up to the chain, right, and recover your funds. But our bet is for people in that position who have, $100 worth of funds or $200 worth of funds, their Apple ID or their Google account is going to be far safer. And so, absent mass censorship or the platform being shut down, they're actually going to be fine. So we're still discovering in real time like what the right posture is here from a security perspective. But passkeys are a big part of it, and we were lucky. We jumped on the passkey wave just at the perfect time.
What percentage of your user base would be these small token holders? If you even have that type of insight.
Yeah, it's a good question. I think like a lot of things, is sort of 80-20 rule, right? Like 80% of the assets are held by like 20% or fewer of the people. So there are a lot of accounts. I think somewhere around like 50 to 60% of the accounts have less than $500 in them. So, for those people, and again, just to be clear, right? Like these are all still enthusiasts, right? Like we don't really have normie retail yet. So everyone has an EOA. It hasn't really been a huge problem. But as we try and grow out into that more centralized exchange audience, there are people who are on centralized exchanges that don't have an EOA. They store all their assets in Binance. Like, why would they have an EOA? It doesn't make sense, right? And so for those people, we need a different posture that's maybe slightly shifted to accommodate them.
Cool. And kind of a big question, but when do you anticipate trading going live?
I mean, technically, trading is live, right? At the moment you can swap with a very small subset of assets between stable coins using Curve, right? And we built this for our emergency withdrawal feature, right? So in case you have USDE and you need to get out, we use CCTP from Circle to, hit the escape button, which means we need to route your stable coins out of USDE into USDC and then hit the escape hatch. So there's a very, very thin slice of trading activity that's going on right now. Wider trading activity will happen, towards the end of the year. So Jupiter is already out of audit. The contracts and programs there are working, and we're feeling pretty good about that. We just want to make sure, we have a lot of designers, right? Like, the point of Infinex is to build things from a user-centric perspective. And so we have a lot of designers who are thinking very deeply about how do we design an interface for someone to swap assets that is not an enthusiast. And so we want to make sure that we get this right. It's really important. If you look at the Infinex interface, it is different in some important ways from, say, a DeFi interface, right? And the reason why it's different is because it's going for ultimately a different audience, right? It's more, it feels more like a centralized exchange than a DEX, for example. So we need to find that sweet spot of how to implement swaps and spot trading in a way that feels more like a centralized exchange, even if it is ultimately routed on chain.
Okay, and is Infinex available to US users? And if so, are you worried about regulators?
Infinex is available to everyone. There's no geofencing or VPN blocking or whatever, because it's a non-custodial interface, right? It's like MetaMask. From that perspective, from a regulatory perspective, it's just a wallet, right? It's a very fully featured wallet, right? It's got a bunch of cool features, but ultimately there's no commingling of funds. Your funds sit in a wallet, whether it's a program on Solana or a smart contract on Ethereum or Arbitrum or Base, that you solely, Tim, control. We have no ability to move those funds. We have no ability to do anything with them. We can't take them. Your passkey via turnkey is what controls those funds. And so, it's the equivalent of Rabby or Phantom or whatever. And, our view is that is something that should be accessible to everyone.
Can you say that that's sort of, for instance, if you look at Tornado Cash, in that case, it's also non-custodial. It's, people making transactions with other parties, and the developers of Tornado Cash are not like looking after any of the coins, but obviously they still got restrictions placed on them. Regulators went after them because of the activities. So, like, do you think that in itself is completely risk-free, or do you think there is still some risk?
There's nothing in crypto that's risk-free. if you want to live risk free, like don't be building stuff in crypto, right? There's too much uncertainty and ambiguity around global regulatory postures. Pick your jurisdiction and you're going to get a different answer for a different thing, right? So the question for me is not can we get regulatory certainty or de-risk completely. The question for me is like, is this a better technology? Right? Is this a better technology, better for users, better for the world? And the answer is yes. And so if that is the answer that I genuinely believe, I'm going to keep building stuff in crypto until, someone shoots me in the head or puts me in jail. That's just what's happening.
I mean, just as a comment, to my knowledge, I don't think the SEC has gone after like one of these pass-through solutions for DeFi. So even though that you're offering yield opportunities, you're sort of like an interface or an aggregator for it. And so far, at least, those have been relatively safe.
Yeah, I mean, again, like relatively, basically everyone's getting a Wells notice these days, right? So, and this is, I think, an important fact as well, right? At some point in the last, call it, year or so, maybe a little bit longer, maybe 18 months, right? It became very obvious to me that we were no longer in an environment where it was like, oh, we just need to educate regulators. They just don't get it, right? At this point, I think it's unequivocal, at least in the US with the current regulatory regime, they get what we are doing. They just don't like it and they're trying to kill it. Now, I don't accept that. I do not, at a very fundamental level, accept that a regulator in a specific country should be able to kill an entire technology, right? So at that point now, you're my adversary, right? I am here to try and advocate for the proliferation of this technology, and I'm going to build stuff that makes demand for this technology increase significantly, right? And I'm just going to keep doing that because this is not a good faith relationship where it's like, if I can just explain to you why this is better, then maybe you'll like it. No, like you're trying to destroy this technology. That to me is a bad outcome for the world. And I'm going to fight against that as much as I can.
Okay. And on Infinex, you have a whole earn section. Is there like going to be incentive for people, for instance, to deposit their stETH on Infinex instead of having it in their own wallet? Like, are there sort of plans there for anything like that?
I mean, this is the thing, right? Like, their stake ETH is in their own wallet when it's in Infinex, right? Like, it just looks different. Like, you know what I mean? It's a weird feeling where you're like, oh, like you should put it on the Infinex platform. It's not really in the Infinex platform. The platform sits on top of the chain. The platform tells you what's in your wallet in a much nicer, friendlier, better designed way. But ultimately, it's just sitting in a smart contract that you control. You deposit that staked ETH into a smart contract. It's yours. It's in there. You control the private key. The end. So
do you want to take on both MetaMask and exchanges like Coinbase and Binance in one go?
Here's the thing, right? We are in an environment where technology is always path dependent, right? And so, we have this era that we've existed through where you have, let's say, enthusiasts on one side and retail on the other, right? And centralized exchanges emerged to satisfy the retail need for trading, custody, etc., in a way that didn't care ideologically about the technology, right? It was just like the simplest solution to the problem, right? And the best UX, right? And so centralized exchanges emerged to solve that, to allow counterparties to trade with one another, all of this stuff, right? But the trade-off that you needed to make to use a centralized exchange is you give up the whole purpose of the thing, right? Not your keys, not your coin, but you're like, YOLO, I'm trying to trade here, so I don't care, right? And so that fork in the road that people went down from a retail perspective was almost inevitable because centralized exchanges were always going to be better than decentralized tech in the short term. Handing over your crypto to someone and letting them wrap it up in a database was always going to be better at UX, right? Then on the other side, you had the enthusiasts who were like, we're going to use, MetaMask is great compared to Mist, right? Like, we're going to use like the early wallets were like insanely bad, right? Like software like CG Miner, the OG software that the enthusiasts were using, but enthusiasts don't care. In fact, it's actually a feature and not a bug. The harder it is, the more excited an enthusiast is. The weirder it is, the more excited enthusiasts are, because now they have some esoteric knowledge that the world doesn't have, right? And they get to go down this crazy rabbit hole and learn all of this stuff. And so you had this fork in the road where enthusiasts went one direction and retail went another direction, right? Infinex is about bringing those two people together, bringing those groups together and saying, we actually don't need to make that trade. We can bring it all back together. We can give you the best UX without compromising, right? And we couldn't do that for like a decade and a half because the tech wasn't there. The tech's there now. We've invested, tens, hundreds of billions of dollars in infrastructure to get to a point where now you can bring the two streams back together.
Okay. And why did you choose to have a patron sale, and what are you going to use the funds for?
We chose to have a patron sale because to your point, right? Like you kind of, half jokingly, right? Like so you're trying to kill Binance and MetaMask at the same time, right? Like, two of the biggest, players in the space, and not just Binance, right? Coinbase, Bybit, Rabby, Phantom, all of them. Like this is not a stable equilibrium. The market that we have today, where 90% of the people are in someone's database and 10% of people are using an absolutely insane technology that is not usable at all, right? Like that's not stable. Like something is going to shift there, right? Now, if we're going to shift, if I'm right, and we are at the inflection point where it's possible to bring these two groups back together and unify them, that's going to take a lot of coordination. We're going to need a lot of people bought in, right? Because one of the challenges with crypto is if you don't have financial exposure to something, you aren't just agnostic to it, right? Like if you don't hold XRP, you're not just like, oh, we'll just let XRP go and do its thing. I'm sure it's fine. It's not harming anyone. You're actually out on Twitter being like, XRP is the devil and we have to kill it, right? Because it feels very zero sum. And so if you don't have people who are in your camp, who are inside the tent, then you're going to have a real hard time convincing anyone that this is a narrative that's possible, that we can actually unite everyone, right? And so the current meta is you go to Andreessen or Dragonfly or, whoever, right? Multicoin, you raise a seed round, then you go and raise a Series A. The good thing was I was able to opt out of that because I have my own money. So I bootstrapped this thing for 18 months because I could. Not many people can do that. I'm in a very privileged position to be able to have enough conviction to say I think there's something here. And honestly, if we tried to go and raise a seed round for what we started with, no one would have funded it. It was idiotic, right? We were wrong, right? Like the early version of Infinex was a dumb idea. It took a lot of iterations to get to the point where this actually makes sense and is achievable. And so the patron sale is about, hey, if you think that this is a thing that we want to achieve, and a lot of people do. A lot of people get that we can't keep running on centralized exchanges forever. Something has to shift, right? If you think that MetaMask is not the pinnacle of, decentralized user experience, right? If you believe either or both of those things, we want you over here in Infinex land, right? We want you to come over here. So you get to participate in this thing by buying a Patron NFT. It doesn't do anything, right? But you can signal that, hey, I get this, right? And this is the thing, if you look at the early community, someone like, community like the Link Marines, right? Sure, the Link Marines got rich, right? That is a big part of why the Link Marines are still around, but they actually got right. And that's as important. From an identity perspective, the Link Marines are like, all of you idiots in 2016, 2017 said oracles were a terrible idea. Especially, some deep OG ETH people were like, oracles are not just a bad idea, they're an abomination, right? These centralized things, they shouldn't exist. We should, only use on-chain data. How dare you bring off-chain data? And Link Marines are like, no. This is going to change everything, right? And they were right. It did. We need oracles. Anyone who was sitting there in 2016 saying oracles are an abomination looks like an idiot now, right? And so whether the Link Marines got rich or not is kind of beside the point. What they actually did was buy a thing that aligned them with being right for the next 10 years. And now they've been just like dancing off into the sunset for, the last 10 years doing victory laps, right? Saying all of you guys were idiots and I'm a genius because I saw this, right? And that is part of their identity. Like oracles are like, they wake up and pray to like, Sergey, the oracle god every morning, right? It's part of their identity. It's their religion. They're in a cult. And so if you can build a group of people who have high conviction about a thing that is maybe, not obvious, right? You can build a cult. You can build a group of people that will be your advocates for a decade, which is what we need. And so that's what the patron sale is about building this alignment with a group of people that are like, this is going to change. Centralized exchanges are going to die and something's going to replace them. And this has a shot at doing that.
And why did you choose NFTs instead of issuing like a fungible token, for instance?
Because NFTs are deliberately kind of illiquid and dumb, right? Like NFTs are like deliberately not, a profit right into the thing. It's literally a meme, right? Like what is patronage, right? Like a patron gives money to someone with no expectation of return. Now, maybe they have an expectation of like the world gets better, right? Like it's better if, Michelangelo has, it paints these paintings, right? Like, the Sistine Chapel is better. The world's better for it existing, right? So I'm going to fund this dude to like go and, sit up there for 100 years and paint shit on the ceiling, right? Like you don't make money from that necessarily, right? And so this idea of patronage of like, hey, you believe in the journey, you believe in this meme, you believe in this narrative, and now you get this NFT, which is again just a meme, right? As dumb as a Bored Ape or a CryptoPunk or whatever, but the Bored Apes, they believe that it is a thing. It's a coordination mechanism, right? Bored Apes believe in Bored Apes. Punks believe in punks. Pudgy Penguins, the people in the Pudgy Penguins, that's a cult, right? And so people who hold patron NFTs, that will be a cult. People will be like, no, I hold a patron. You can't take it away from me. I was right. I saw this thing and it makes sense.
Will there be like a group chat or a Discord or something where you can only get in if you have the NFT?
So right now there's not. There's just a Discord and you can do stuff. Will we gate a channel? Maybe. We're already thinking about gating some things, right? Like Echo is a project that I'm very bullish on at the moment. I think it's one of the ways that we can change this current broken meta. It's a different approach, obviously, to like selling an NFT, but I think it's a very valid approach. And so I'm actually planning to do my own Echo group that is gated by patron NFTs. Again, whatever, the more you can do to create intangible value for someone who's aligned with this thing, the better off you'll be, right? And now maybe inside the platform, we'll have a thing where we detect that you are holding a patron in your account and you get cool stuff, access to like early features or, something like that. But again, the more kind of utility you get out of being a patron holder, the more it feels like you're in this community, the more powerful it becomes.
Yeah. Have you been active on Echo, like made any investments through it?
Yeah, I have. Yeah. I've made a couple of investments through it. Funnily enough, like a lot of the Echo deals I'm already in. The group, there's a lot of like group alignment there in terms of like, which deal people are going into. I can't talk about particular deals, but it's just the way that it kind of falls out, right? Some pretty high profile deals are there and I already had allocations to it, but there's been some ones that I didn't have allocations for. And, I was excited to join it. And I'm also sort of supporting of it again, in the same, like I have no financial alignment with Echo. I have an ideological alignment with Echo. If Kobe would sell me an Echo patron NFT, I would buy that thing in 10 seconds, right? Because I want to I want to be able to show my commitment to like, this is important. We're trying to change the meta, right? Maybe Kobe will mint me an NFT and send it to me. But I think it's a very valuable thing. outside of any financial alignment, right? Just as a signaling mechanism.
Yeah, and you might even get cheaper than your other allocations. I think there was a round recently where it was like the Series A had one price and the Echo group got a cheaper price. Obviously a much smaller amount, but I thought that was interesting.
Yeah, I think there's all kinds of, everyone gets that the current meta is broken. I don't think anyone is confused about that, right? Like even the VCs who like wink, wink, are leaning into this meta as much as possible because it's very beneficial for them. They also get that like it's just not sustainable. Now, at the end of the day, you have a fiduciary duty as a VC to your LPs. You can't opt out of this, otherwise you got to just shut your fund down, right? So I don't expect anyone to not, play this game, but someone or someones or multiple people need to shift the equilibrium. The current equilibrium is just unsatisfactory.
Okay, and how will Infinex impact the Synthenix token, if at all?
It's a good question. There's this idea of a DeFi renaissance going on right now. I was on a Spaces earlier today. All of the DeFi founders are fired up at the moment, whether it's Rune or Sam from Frax. We've even got Vitalik. We've got Vitalik, pitching for DeFi right now, right? So there is this idea that, and again, this is where I think Infinex is going to be a huge unlock, right? DeFi has been building for enthusiasts for the last 6 years, right? There are no more enthusiasts. We tapped them out a while ago, right? And so when people are like, oh, why don't we have more DeFi activity? DeFi has gotten better. It's like the fundamental barrier to entry for doing DeFi stuff hasn't changed. It's the same. So you might have improved the utility of DeFi, but the barrier to entry is still just as high. We haven't lowered the barrier to entry to play in DeFi, right? And so Infinex is about lowering the barrier to entry. The DeFi builders have increased the utility of DeFi by like an order of magnitude over the last 3 years, right? No one has gone to the fence around DeFi and said, let's fucking knock this thing down, right? And so Infinex is about smashing the fence to pieces so that anyone can walk in and play DeFi. That's what we're there for. So in terms of like, what is the impact of Infinex on DeFi? It should be huge. It should make DeFi accessible to everyone in a way that it just has not been. And, there's a lot of DeFi cope. As a DeFi founder, I'm like, people will learn MetaMask. They will learn private keys. They will learn gas prices. They will learn all this stuff. And the reality is that they just won't. Right? The average person just won't. Certainly not when Binance is there offering very similar features with much, much less complexity.
I think a lot of people are just burned out that DeFi tokens haven't really performed well.
But here's the thing. Why have DeFi tokens not performed well? In spite of the fact that DeFi has empirically gotten better, right? It's more efficient. It's cheaper. Like every metric that you could possibly measure DeFi on has gotten better, but the DeFi tokens haven't improved because tokens are about attention as much as anything. They're about alignment, right? There are no new net buyers of Aave because there are no net new users of Aave. The existing users are getting a better deal. It works better. They've got more markets. It's more efficient. Interest rates are low. Like all of the stuff that a DeFi user is getting out of Aave is better. They're more profitable. They're like all of the metrics that you care about, but they have no more attention than they did. In fact, arguably they have less attention than they did in DeFi summer, right? And so the question is, where does more attention for Aave come from, right? It needs more users. And right now, those users are on the outside. They're outside of DeFi. They're on the other side of the fence, right? And so we need to bring them in. We need to make it more accessible. When people actually start using Aave, right, their minds are going to be blown. Like they really will. Like finance is not that interesting, but like when people are able to access Aave in a very simple manner by clicking a button and they don't have to pay gas fees or deal with all the complexity, their mind, like not everyone, but like there's a huge number of people that are going to be like, this is amazing. How did I not know about this? How was I sitting in CZ's database for the last 3 years, right? And the answer is you didn't know about it because it was too hard for you. We didn't make it easy for you. So we're going to make it easy for you, and we're going to show you Aave, we're going to show you Curve, we're going to show you Camino, we're going to show you Jupiter, we're going to show you, all of this cool stuff that's existed. But again, the fence was too high.
Talking of bringing in mainstream people to crypto through Aave, I'd be curious to know your thoughts on former President Trump, who is sort of attempting to do exactly that. He's creating an Aave instance on Scroll, with later plans to do sort of like tokenized real estate and stuff. But he's starting basically with a Aave instance. Do you think this is what's going to bring crypto to the mainstream? Like, what's your take on the project?
I think, again, everything is an attention game, right? I think the seminal paper of this current era, right? It's like all you need is attention, and it's not even about that kind of attention, right? Like that paper about LLMs, there's a meme in that I like can never get away from, right? Like, it is true. All you need is attention. Attention begets everything else, right? And so having a former or future or some Schrodinger version of that, right? President building a DeFi project, is it good for DeFi alignment, right? Like, is it good for crypto alignment for someone to be building something like that? What is interesting to me is the starting point of what they were going to do, the weird fork of some protocol that got hacked multiple times, to now forking Aave on Scroll. Like, they're directionally getting closer to something that's real, right? And so, like, if we can get someone like that, who has an incredible amount of attention to get people to pay attention to DeFi, amazing. But here's the problem, right? It kind of isn't working. Because the audience for Trump and the audience of people who can use DeFi, there's no overlap. There's just none, right? So there are people, you look at the Truth Social, right? The people who are willing to buy a Trump meme stock, right, is very high. But guess what? They've got a brokerage account. They press a button, it does the thing, right? Like, it's quite interesting that there's orders of magnitude more demand for a Trump meme stock, right, a meme equity, than there is for a meme token, right, which arguably World Liberty is a Trump meme token. They're all kind of tied to his attention, right? And again, it just speaks to the fence. The fence is too high. We haven't made it easy, right? If Infinex were further along, if it was a year into Infinex and we went and integrated World Liberty Financial, and anyone with $500 could, create an account without having any prior understanding of crypto and fund it with Apple Pay or whatever, I think you'd get a different outcome. And again, it speaks to the barriers to entry, right? The barriers to entry for buying, the Trump SPAC were far lower than buying the Trump token.
Okay, and we've seen the Trump project got pretty poor sales. Like, no one's really buying the token. Why do you think that is? Is it people don't see the vision of it? Is it the 1 year lockup period? What do you think? Like, why is it not completely sold out?
ICOs are hard. People forget. People think that ICOs were so easy. Like, ICOs were hard to do. The amount of effort that went into a successful ICO, even the scam ones, right? PumaPay, giant scam. Like, they raised $150 million in like April of 2018, right? It's one of my favorite ones because it was like right at the end, and it was so obviously nonsense, and yet it still somehow worked. But those guys would have spent $10 million launching that ICO, right? And that was back in a time where ICOs were the meta. It was very obvious. It was a very PvP game. You were trying to buy every ICO and flip it. Everything was aligned with like ICOs, right? And it was still very hard. For every PumaPay, there were 50 others that tried to be PumaPay and just didn't nail it, right? Maybe 100, right? So like the success rate of an ICO raising, tens of millions of dollars is very low, right? So I think that is actually something that people have forgotten, that ICOs are hard. And if you want a bunch of ICOs raising tens of millions of dollars, you need thousands of ICOs trying. There's a survivorship bias there.
Yeah. What do you spend 10 million on in that process?
Back in the day?
Yeah, like where's that money going?
Yeah, so if I had to do, a hypothetical P&L for Puma Pay, like what did they spend the $10 million on? It would have been a bunch of conference sponsorships. They were at every single conference, right? They had huge booths there, which at the time was $250K to $500K to sponsor a booth at Consensus or whatever, right? They hosted a bunch of independent events themselves and got KOLs, angels, a bunch of other people in, right? They spent a ton of money on call it inorganic advertising, right? Getting KOLs to talk about it. They spent a ton of money getting listings on all of the ICO websites, right? ICO drops and all of that stuff. Would have been millions of dollars. They would have done partnership deals with agencies, ICO agencies. Back in the day, there were a ton of these, right? That would have charged some percentage of the raise, 1%, 2%, 3% of the raise. They would have spent a ton of money on the actual ICO platform because almost everything at the time, almost everything at the time was bespoke. You had to build a bespoke platform to actually do the sale itself. So that $10 million would have been racked up very quickly in like 6 months. They also had endorsements and a bunch of other stuff. So, the cost of, if you think, like, what's the cost of doing an IPO? It's like 7%, right? So if you spent 3% of raising $150 million, that's actually efficient. It's not even as bad as an IPO, right? Like Goldman's going to take more money from your IPO than that, right? So, it wasn't like it was like hyper inefficient or anything. It was just, that's the reality, right? So my question is, how much did World Liberty Financial spend to do this ICO? My guess is not much. And the problem is a lot of the infrastructure that existed back in the ICO days has fallen apart, right? It's not there. There's no ICO drops. There's no coordination place for everyone to find out about things, right? But it also comes back to the audience for Trump. And, there's obviously a lot of Trump people in crypto, right? But the normie audience for Trump that would buy that, and then the people who are capable of buying an ICO, there's very little overlap.
I think the non-transferability of the token was also a bit of a turnoff for a lot of people. It just seemed sort of like a poorly designed system. Like even the website crashed.
I mean, every ICO used to crash.
Yeah.
Every single ICO website used to crash. Like, I remember the Civic ICO. It was like 6-hour nightmare of like waiting, trying to get on there. It was gas wars. People forget how insane the ICO era was. They genuinely do. 2016, 2017 era ICOs were pure chaos. Nothing went right. It was all like cobbled together. So I don't think that's the answer. That's not a really satisfying answer to me because people found a way. It's the question is, where's the demand? Why is there not demand for this thing? And again, I think the meta shifted. People are buying meme coins now because the meta has shifted away from these kinds of raises, right? People need to see a successful ICO again before they're gonna be willing to jump in, right? So now, if this $12 million ICO, they launch the token pumps, everyone does really well, people start using it, like that will actually create some momentum for someone else to come in and do this again, and it'll be much easier. But the first people who do it, it's always painful.
Yeah, I do think the year-long lockup's quite a big thing because I feel like people's expectations on getting returns has just got shorter and shorter to the point where now some people, I imagine people are getting in and out of tokens within a day, within a few hours. And then to be like, yeah, but you got to wait for a year before, you can even sell it. Seems crazy. I was just looking at the numbers. It sold less than $13 million. They sold less than 1 billion out of 19 billions. Out of 20 billion. that was for sale. So like under 5%.
This is, you know, one of the, if you go back to the ICO meta, right? The reason why the ICO meta shifted so quickly was in response to things like this, right? You know, if you go back to the Gnosis sale, they did this weird price discovery mechanism, right? Because there had been a few examples of ICOs that had ignored price discovery and said, we're going to go out and do this, and it didn't work, right? And so there was this shift in, I want to say like maybe late 2016, early 2017, away from a priced ICO into a price discovery style ICO, right? Where it was like a Dutch auction or some kind of auction mechanism that would allow for price discovery. So I think that's probably, if it were me and I was redesigning this Trump ICO, I'd do an LBP or put it on a bonding curve or something, right? Create a scenario where like, you know, the token is quite cheap until it's not, right? And then that creates momentum.
Yeah, interesting. I guess part of it is because it's this is sort of an external project that is sort of using the Trump brand, but isn't, you know, it's a bit distinct. Like it wasn't super clear that Trump, you know, knows the ins and outs of an Aave instance.
Look, I'll tell you this, right? If Trump had been around in 2017 and done World Liberty Financial and it was a fork of ETHLend or something like that, right? The thing would have raised $1 billion. I promise you all day long, it raises $1 billion, right? So the question is, why 7 years later does it do 10 million instead of $1 billion? I've given you some of the answers. There's more answers, I think. Like you could spend hours going through this, right? Like you know, in my former life, when I did the Haven ICO, the way that I did that ICO was I deconstructed all of the ICO meta, every single ICO, every single mechanism, every single thing that went wrong, every single thing that went right. That's how I approach things, right? I systematically deconstructed the entire ecosystem to understand what worked and what didn't. And that's how we designed our ICO. That's how we figured out how to do it, right? I was like, what is the optimal approach to this problem today, right? And, you know, things shifted. It was a completely open sale to people did private sales. You know, things were constantly shifting. So, you know, again, I think if Trump had a time machine, he raises $1 billion worth of ETH in 2017. I could definitely do it. Give me Trump in 2017. I raise you $1 billion all day. I promise you.
What would be your strategy?
The first thing that I would do, and I think the thing that maybe they missed, is not building a coalition of KOLs and funds, right? You know, go and get like now. And again, I don't know if they did this or didn't do it or tried or whatever and it failed. But like, go get Multicoin, go get Dragonfly, go get like Maelstrom, right? Like, you know, these are funds that are, let's just say, very comfortable playing games, right? They're very comfortable buying a thing because they think it's going to go up, right? And the Trump Association, you know, could they have memed those types of funds? I think could have memed this into existence and created more of a sense that it's going to work, right? At the moment, and this is the thing, right? Like, you know, ICOs and fundraising and whatever, they're exponential processes, right? So, you know, you start on day one, right? And the thing doubles, but it doubles from nothing, right? It goes from 1 to 2, right? Then it goes from 2 to 4, but like the first 10 days, there's nothing. If you look at it, it's just a flat line, right? There's no excitement, there's no awareness, there's no audience, right? And then like one day you go from like 128 to 256, and then you go to, and all of a sudden it starts ramping up, and all of a sudden you can see the line, it's creeping up, right? And you need to make sure you do all the steps right at the time when it's not doing anything, when it's like, you know, immeasurably small movements, right? If you do that and you have high conviction in your process, right? And you just go step 1, step 2, step 10, step 20, one day you wake up and it's up here, right? And I think that that's maybe a little bit of what they got wrong. They didn't have a process for how they were going to get from step 1 to step 20. And you know, if you try and just short circuit and start at step 20, it won't work. You need that exponential process, right? That's the case for every fundraiser. Every single one of my portfolio companies ever On day one, they have the first pitch call. Never in my life has that first pitch call been like, here's $1 billion, right? It doesn't work like that because humans are humans, right? And so the first pitch that you do to anyone, they're like, who else is in? Who else have you talked to? Where's the excitement coming from, right? And you say, well, actually, I've only talked to you. And then you go out to the next person and you talk to them and you say, well, I've talked to them and they were kind of excited. And then it's like, oh, okay. Well, and but you still have nothing, right? There's no audience. No one's excited. And then also, then you talk to the 10th person and then you circle back and, it's this process where like building consensus around something, everything's memes, right? You're building a meme. A fundraiser is a meme, right? And you need to build the meme from small incremental changes and they build up over time, right? And that's the case in everything. And so if you don't have a process and you think that it's just going to go from 0 to 100, you're going to get wrecked.
I mean, there's a joke answer that they should have just launched layer 2 and that would have caught the meta. But speaking of that, I was wondering, there's like a section on the Infinex website where you talk about the chains that you're on, and it mentions Blast, and that's 0 TVL. Is that sort of like a suggestion that's the next chain you'll integrate?
Yeah, correct. Yeah, Blast is next. So we have a game called Bull Run that's running on Blast, and it uses Pyth entropy on Blast, and we're about to integrate Blast as a new deposit chain when that game kicks off. So if you deposit on Blast, you'll get Blast Gold and all that fun stuff.
Are you surprised that there's not more money on Polygon?
Not at all. No? I mean, sorry. Was I surprised? Yes. Am I surprised now? No, right? I just had an assumption. I've never really paid that much attention to Polygon, I'll be honest, right? Like, I think at the starting point, a lot of the ETH maxis were like, this is a scam chain. It's a Binance thing, like, whatever, not interested, right? And I think that was a mistake. I've said this before, it was a mistake. If we leaned into Polygon earlier, instead of letting people leak out to BSC and even Solana and some of these other chains, I think we could have kept people, the ETH gas price thing, all of the ETH maxis were caught offsides by this a little bit. Like, we're kind of like, $200, whatever, hit the button, right? Like, we're really a bit detached from reality at how bad, everyone else was priced out of ETH. And so I think if we'd all leaned into Polygon, at the time, unfortunately, I was trying to meme optimism into existence, right? And so, I was working really hard to like create this monolithic L2, make sure that optimism won. It was a winner take all game in my mind, right? And so I ignored Polygon. I think it then, had a huge ramp up in activity and, a bunch of stuff. I mean, obviously Polymarket's still on there, right? So they've got some wins. And then I think in the last 18 months, as the other L2s have really kind of run away with it, it's just fallen back. And so when we launched on Polygon, I was like, oh, that's weird. Like, what's going on here? Like, have I missed this? Like, did there was the spike of activity that's come down. And again, yeah, like the activities just dropped down to very, very minimal amounts, and so we've had almost no traction. We've tried multiple things to get the attention of the Polygon community. I don't think there's much attention left there, unfortunately.
Yeah, big question is probably how much they need to pay Polymarket to stay on the chain. Now we've had some questions in the chat about Synthenix from sort of long time supporters and people following the project. What are your thoughts on, I guess, its future? How active are you in that, and sort of where do you see it going?
Yeah, so funnily enough, there is a new thing going on with Synthenix, right? We just had this referendum. A new person has shown up to try and coordinate things. The Synthenix became too decentralized, which it's a nice natural experiment, right? I think to run. But if you put 30 people in 30 different cities and see whether they can actually coordinate what is still to some extent an early stage startup, the answer is no, you're past the breaking point, it turns out, right? Now, I don't know I don't know exactly where that break point is, but 30 people in 30 cities is well past it. It doesn't work, right? And so, we tried a few different things. My last attempt was like last year before I got really deep into Infinex. The last year I've been 100% focused on Infinex. Like even Bodhi, our prop fund, I've kind of ignored it and let Jordan run it. Like I've really not focused on anything, other than Infinex. It's been, 80 hours a week of work for the last year. So I tried one last thing to kind of reorganize the contributors and see if we could make it work. And it just didn't work. It's just too far gone. There was no way to bring it back in. And so someone's turned up in the last 2 or 3 months and kind of pitched me, this revamp, right? How would we do it? How would I do it if I had the time to do it? And so I spent a bit of time thinking that through and trying to work out like how could you fix some of these problems. Thankfully, he and a few other people have kind of taken the ball and run with it, and they're working on trying to like fix this thing. Even like Synthenix v3, Perps v3 is a very good protocol, but it still has some issues, right? It still doesn't quite do what it's supposed to do, especially for integrators. There's a lot of fragmentation in the ecosystem. There's multiple front ends, just lack of coordination. So this kind of Synthenix rebirth, if you will, right? This referendum, I think it will be a really great opportunity to coordinate everyone to fix some of the long-standing issues, like fix some of the tokenomics issues, create an app chain for Synthenix, bring everyone onto that, deal with some of the like underlying debt issues, deal with the stable coin, deal with some of the inefficiencies. There's a lot of different things that it was hard to get consensus to make changes. It sort of got into this like stasis state. So I'm really excited about that. And so I agreed as part of this deal to join as like an advisor on the new Spartan Council because I've got a lot of ideas about token design, as you can imagine, right? And I'm really excited for like a redesigned SNX token. I think there's a lot of opportunity there.
I like seeing this happening because there isn't enough of like there aren't enough instances where people like come in and take like an established brand and try to bring it back to life in crypto.
Yeah, I mean, the original idea was almost, the person who turned up was a token holder, right? A large token holder, not like a controlling stake, obviously, but, like single digit percentages of the token supply. And they're like, what's happening here? Like, how do we fix this? And I was like, well, first of all, we need to like figure out all the things that are wrong, right? And it turns out there are a lot of things that were wrong. There are a lot of things that were right too, but startups need to be more right than wrong. Otherwise, it kind of spirals into nothing. And so they the original idea was almost like a hostile takeover, right? Like a activist investor coming in and saying, "You're getting it wrong. Let's fix this." Right. But that's what it needed. It needed some urgency. It needed to, inject a little bit of accountability back into the processes. And so, yeah, I'm super bullish on it. Like, Synthenix has incredible Lindy, right? It's been around for 7 years. Like it's, had tons of TVL. The contracts are really robust. People know how they work. Like there's a lot of value in that. It just needs to be brought back. But again, I think this is true for a lot of DeFi projects. They've been stuck in this state where only enthusiasts have cared about them for a while. And, and then a lot of those enthusiasts got too rich and, just went and hung out on a beach somewhere. They weren't pushing, Degen Spartan, right? The original SNX bull, like he's gone, hanging out in who knows where, sipping a margarita on the beach.
Yeah, he's gone quiet. It's been a while since I chat with him. Now, I have sort of one final question as we wrap this up. You've been around the industry a long time. CZ and SPF are now pretty much out the picture. How do you fancy your chances at being the next sort of big name CEO of an exchange?
Yeah, it's a good question. Obviously we still have Brian, And Brian's doing some very good work in fighting US regulators, I would say. We used to have Jesse at Kraken. He's kind of stepped back. So there's a gap for sure. Like, there's no question there's a gap. I think that gap, if we can get DeFi more accessible, right, I think that gap will be somewhat filled by some of the DeFi founders, whether it's Rune or Stanny or Hayden, Sergey. Like, I think some of those people will step up if we can make DeFi accessible. If we can bring, go back to that point, right? Like, we had this centralized and decentralized streams, and it was a fork in the road, and they went in different directions. If we can reunite them, then all of the main characters should be people building DeFi. Realistically, shouldn't be some guy with a fucking database. That's insane, right? So, I'm bullish on some main characters will emerge out of there. For whatever reason, I think I'm a tough sell as a main character. I'm a bit too weird. It's never really, even in DeFi Summer, I was never really like a main character even in DeFi Summer, right? I'm not 100% sure why, but I think someone will emerge for sure to kind of take this DeFi centric user experience forward. So we'll see who manages to pull it off. Hopefully it's not just one person, right? Like, that would be, I think maybe that's a possibility as well, but I would hope that it's more of a consortium of people that are all building, maybe a little bit decentralized. Maybe that's part of my problem. I not centralized enough.
All right. Well, that's all we have time for today. I want to thank Kain for joining, and Dan for co-hosting. Make sure to give us a like and subscribe on YouTube or Twitch or wherever you're watching us. And remember, we have a 20% discount code for Emergence, our first ever crypto event, using the code TheCryptoBeat. And make sure to read the blog to stay informed on everything crypto. See you next time.